Righto, buddy miners, we've got another bloody legend from stateside joining us today, and this is in parallel to the legends of Axis Mining Technology, JD. We cannot forget about them. The bloody cornerstone of the show and the trusted advisor for drill hole survey instrumentation, and quite pertinent actually, because the fellow we've got here at the moment used to be, you would say, the trusted advisor for bloody Goldman Sachs, the head of research back in the day, former partner at Goldman, left Goldman at 2014, and now he's gone on to bigger and better things to talk to us specifically. Mr. Arjun Murti, how are you, Cobbo? Welcome to Money and Mine.
I am doing well. That is an awesome introduction. And the fact that you were in Perth, Australia, I was telling you, my last ever analyst trip in my final month at Goldman Sachs was to Perth, Australia. So I hope to get back someday. It was an awesome visit to go see the Gorgon LNG project.
Oh, fantastic, mate. We are absolutely honoured to have you on. And JD's been religiously listening to pretty much every fucking podcast you've done in history by the sound. So he does good DD. JD, take it away, mate. I'm very excited for this yarn.
I've got to say, I love it when the person we interview has their own sort of podcast, because it just makes the research that much easier. And some listeners out there, they might know Arjun. He writes the Super Spiked Substack, which has got a video format to it as well, podcast, and now works at Veriten. So I'm pretty pumped. Like you said, Matty, Arjun worked at Goldman Sachs. You've covered energy for the best part of 2 or 3 decades now. So Plenty to chat about. I want to start with your guiding force, your guiding principle, Arjun. You've spoken about prioritizing meeting the global energy needs for everyone on Earth. You speak about this in the context of, us, all of us on this call being in the lucky 1 billion versus the 7 billion. So can you kind of paint the picture of how you see energy demand and how perhaps the narrative is a bit distorted at the moment out there?
Absolutely. And it really is a pleasure to be here. It's been about 10 years since I was at Goldman, and like the first 22 years was mostly as a sell side, a little bit as a buy side analyst. And I was enjoying my time as a board and advisory board member at all these various things. But there was something about COVID and negative oil and this sudden energy transition mindset that kind of took over the world, that everyone suddenly has to be Paris aligned, not just the world and not just countries, but somehow individual companies, and actually primarily individual companies in rich Western countries. And it's led to a lot of, I think, bad perspectives and understanding about energy. And it was also a period of time when energy prices were generally low, so it didn't matter to anybody. There weren't wars, there wasn't disruption, shale oil was growing. And I think we've gotten to a point where everyone is treating counting CO2 as the overarching objective. And my personal count it, I support the idea that ultimately, we're going to want to, go to lower carbon forms of energy. But the reason to do so isn't to count CO2. It is to provide energy for everyone on Earth. It's a hierarchy of needs. We all know that we can't live 5 seconds without energy. There's the lucky 1 billion of us, as you highlight, US, Europe, Canada, Western, Australia, Japan, New Zealand. I probably forgot a country in there. Maybe South Korea deserves to be in there. We use a disproportionate amount of the world's energy. In oil terms, it's about 13 barrels per person per year. The rest of the world, the other 7 billion people, soon to be 9, are using just 3 barrels per capita. And some are using 1 or 1.5, African countries and India as an example. And we all know that you can't go 5 seconds, none of us can, without energy. And I don't know why the world needs to keep learning this lesson for everyone being energy rich first and foremost. And I think with that, if you're a country that is not long crude oil, if you're short crude oil, you don't have enough of it, you are going to be motivated non-fossil fuel-based energy, and that is going to be the driver of, quote, decarbonization. It is not, in my opinion, going to come from counting CO2, or at least it's not going to come from that, unless you solve for how do you make everyone energy rich. It can't be okay that someone has 1 light bulb and they go to 3 light bulbs and you declare victory. Everyone aspires to our lifestyles. We can debate the timeframes they'll get there. It may take decades, it may take a century. Sadly, some people may never get there, but everyone's going to strive to it. And I will say the 1.4 billion people in China, the 1.4 in India, and the 1.3 in the rest of Southeast Asia collectively they for sure are moving up that economic and energy S-curve. So at least that 4 billion people, again, 4x the 1 billion of us that are currently rich. That is a heck of a lot of energy use to come, and a heck of a lot of, frankly, oil, gas, coal, and a bunch of new stuff as well.
So do you think, like, because they're painted as, like, you know, one thing, but it is two totally separate issues. If you removed the whole CO2 renewables side of thing and we're focusing on base load power as we see it today, would have there been enough energy for the world going forward, or do you think it still would have been an issue, like discounting renewables and everything?
I mean, there is a heck of a lot of oil, natural gas, and coal still to be developed. And I think one of the tricky parts is a whole bunch of the developing world does not have a lot of crude oil. In the United States, we're blessed with it. Canada has it. Obviously, Russia and the Middle East countries have it. And Africa is generally long crude oil, but Asia does not. So I think in Asia, there would have been a huge motivation. There is. You can see it in China's move to EVs, to try your best to not import massive amounts of crude oil if you can help it. On the other hand, they all also have a lot of coal. And so what evidence is there that China is not going to keep burning increasing amounts of coal, even if they're trying to build out renewables? India, for sure, is going to be doing all of the above, but for them, may not be importing as much LNG. It's going to be burning a lot of coal. But I don't think we're on track to run out of these resources anytime soon. So in that respects, could you have 9 billion people equivalently rich to America and Australia in 50 or 70 years? I mean, that's probably a question, but you're not going to have to test it. Because if you're China and you're barely at 4 barrels of oil consumption per capita, we're at 22 in the US, Canada's at 20, Europe's at 10, the rich world's at 13. China's at 4. If they go to 8, it's only going from 13 to 26 million barrels a day of oil imports. They're not going to want to be dependent on either US shale or Canada, or for that matter, OPEC or Russia, whatever, pick your poison. And so that is their move to EVs. And so I think we're not going to test those limits of crude oil. We will already be trying to move on to other things.
So the conversation just super quickly moves from the global energy demand to geopolitics and energy independence, and then it goes in a whole bunch of different directions from there. People often take it down a kind of political route, but I want to hone in on the point you just touched on EVs, because China has won a lot of plaudits for what they've done in EVs from people in the Western world. But you point out the motive being super, super different, and I just want to hone in on that, because EVs, with if the power is coming from coal, the ultimate energy use is still, it's probably higher than an internal combustion engine vehicle. So I just want to focus in on China and their prioritization of energy independence, and just hear what thoughts you've got around that.
I mean, I don't see how there's any question that it's not driven by energy independence and geopolitics. And so China is short crude oil, natural gas, and for that matter, food as well. And so they're hugely depending on importing these resources. And during the time China has ascended, which is really since joining the WTO in 2002, the US has flipped places with it. We do have a lot of food and grains and other resources, but we were importing 13 million barrels a day. As recently as 2007, 2008, by some miracle, we've had this shale revolution. So when you think about China and the US being economic rivals, and maybe more than that these days, that's a huge change in position, where the US has gone from 13 million barrels a day of oil imports to essentially balanced, and with the help of Canada, a slight. China's going from generally balanced 25 years ago to now being the largest oil importer, almost as much as the US was importing 15 years ago. I think the motivation is overwhelmingly, it's going to be all the above for all these countries. So they are using more crude oil, they're using more natural gas, they're using more coal, they've had massive renewables growth, and they're building out nuclear. How is that not the obvious answer for essentially every single country? And again, their population is 3x, 4x the size of the US, and they've still they've gone from being poor to, as a country, being maybe middle income. They are certainly not rich when you look at the totality of their population. And I think it's going to be all of the above. And to me, the driver is they're not long crude oil, they're short it. And that is the motivation for EPs. Now, we can separately decide what is their labor situation, how much of their renewables and other mix comes from a very challenging forced labor situation for some segment of their population. There are other sort of political and humanitarian issues that go with it, but they're burning a heck of a lot of coal. These are coal-fired EVs, make no mistake. And when you build up as much renewables as they, you obviously need a base load supply. So what are your choices? It's nuclear, they're doing that. It's natural gas. They're importing some LNG from Australia, from the US, from elsewhere. But the biggest thing that they have domestically is coal. So why would they want to only depend on LNG or only depend on these other things when the coal price is going to be a fraction of global LNG prices? And it's going to be Chinese labor and Chinese bureaucracy and Chinese taxes and Chinese jobs. And I think that model, to varying degrees, will hold true for India and some of the other Southeast Asian countries as well.
What do you think about just the decision that China, like as you said, China's way is fucking logical. It's like we need a bit of everything. That's the logical pathway going forward. But I suppose we talk specifically about Australia, and you probably hear how much an embarrassment our governments are because they change every 3 months. How much of the stuff is China just smarter on a government level in terms of looking to the future, whereas we're dictated by who's in bloody power at the time and whatever friggin' idea they've got going on?
Well, unlike Australia, we're stuck with our leaders for 4 years. So I actually wouldn't mind this model where people rotate a little
change them out every 6 months.
We look forward to that day if it ever to come.
Yeah.
I think that there's been a little bit of it's true of all the rich countries. It's true, especially in Europe. I've been surprised, honestly, at how true it seems to be in Australia. And to varying degrees, it's true in the US, and certainly true in Canada, was this idea that we need to, quote, urgently transition. But somehow we're the ones that need to transition, even though we're a fraction of the world's population, and even though our resources, and by ours, I mean US shale, Canadian oil sands, Australia LNG, I think it's reasonable to hold our companies to strict standards. That could be the amount of methane that comes out of these projects. The carbon intensity should be as competitive as any other project. If it does not come from our countries, US, Canada, Australia, and I'm going to add Norway to that list as well, it is going to come from Russia, Saudi Arabia, Iraq, Iran. And I'm an American, we can have different opinions on these countries, but they're certainly not always friendly to what I will say is the collective West, and I'm going to apologize and include Australia in that mix as well. And we've gotten into this mindset that somehow we individually need to decarbonize our countries. And so there's this anti-oil gas development that we see in the US, we see it in Canada, and as best as I can tell, we see it in Australia as well, even though I'd argue the resource base can and should and will be held to a very high labor and environmental standard. So if you're going to produce oil for the developing world, it ought to come from countries like ourselves. And I would divorce decarbonize demand, and that could be moved towards more fuel-efficient vehicles. In the US, we're very addicted to SUVs, the biggest cars, and it's offset essentially 95% of what could have been fuel economy gains over the last 20 years because we buy bigger and heavier cars every year. So there are certainly things we could choose to do on the demand side, but why any of our countries would want to penalize our supply, I do not understand in the least. And I think it's this mindset we have to transition urgently by some arbitrarily short date, 2050. It's somehow the only things that is being Australian, US, Canadian oil and gas companies, and probably coal companies as well. And the logic of that, I don't get.
So Arjun, I just want to ask you on the point of setting these arbitrary points, 2050, like a lot of the West did. China, who we kind of view as being a bit more pragmatic in a few senses, they still set a sort of phase out time of 2060 from memory. What do you think of that timeline in their perspective?
I find all these timelines to be absolutely absurd. Again, they're all done with this perspective that we're going to count CO2. We're going to put some, Excel curve downslope to it and simply assume these things are going to be achieved when there is little confidence that I would say one can have. What are the technologies that are going to scale profitably without government subsidies that are going to replace all of current or the majority of current oil, gas, and coal demand? Never mind solving for the other 7, soon to 9 billion people who are moving up that energy and economic S curve. And so I find these dates be sort of bizarre and arbitrary. And if I was to redo all this, how do you solve for everyone being energy rich? We can certainly debate timeframes. We can debate the health of governments like in Venezuela and some of the African countries that sadly is going to result in the population staying poor for longer than they should, given their otherwise robust resource wealth and economic opportunity. You got to solve for everyone being energy rich. When you do that, you'll start seeing some pretty big negative deltas in terms of implied oil imports, implied natural gas imports. that is then the mechanism and the means by which those countries, and we can see it in China, again, we're talking about this with EVs, where they will be motivated to try something different. But the idea that everybody is going to be shifting to EVs by 2030 or 2035 or 2040, I mean, you all are in Australia. Tell me if you can see that in the current copper price. Is there any signs that we are going to have the type of ramp in electric vehicles? Now, I'm an electric vehicle driver. I've driven one for 8 years now. I love it. I view it as a matter of personal choice, not personal carbon emissions. I like the one-pedal driving. I like the instant no acceleration. But as you noted, I'm also a retired Goldman Sachs partner, right? I'm very, very lucky. And I can charge at home, and I live in a nice house where these things are possible. I drive 1.5 miles every day at most. And so the idea that EVs are going to be for everyone, including for the people in the developing world who might not even have functioning electricity grids, is preposterous, right? And so it is about solving for everyone being energy rich. As we're doing that, there will be a natural motivation to not simply use fossil fuels. And it's hard for someone in the environmental community to grasp this, but we don't know the technologies. I think they will come. They're not on track to come within 10 or 20 years. But I'd also say to think they're not going to come within 100 years is equally foolish. And I don't know where within 30 and 75 years it'll come, but it will come. We will discover new things, and they will almost by definition be non-fossil fuel oriented, because large parts of the world can't import the kind of quantities nor would they want to, not for geopolitical reasons, not for affordability reasons, and not for availability reasons. Will they want to import the quantities of crude oil that would make them rich? So there's a huge motivation to move off this stuff. But again, it's driven by, does your population have available resources? Is it affordable? And is it geopolitically secure? Not what is its CO2 content. Now, the world is upside down on this conversation.
Yeah, well, the affordability is interesting because how many people, like spread across the population that aren't at the right end of the bell curve for money is like how many people buy a new car? A lot of people buy second-hand cars, but when there's going to be that delayed period until like second-hand EVs are actually properly available, because everything's new at the moment, unless you buy the BYD Seagull for 10 grand US. But other than that, everything's just too expensive for most of the population.
I mean, there's no question about that. I think it's this idea that we're going to force a transition based on technologies that bureaucrats and environmentalists have decided this is the winner technology. That is not how that is not how you move up hockey sticks. And I think, how do you motivate better behavior? So in the US, it's been bipartisan. Both the Republicans and Democrats have excused the fact that cars have become heavier and bigger every year. And rather than be honest about it and say, hey, if you do care about climate, if you do care about the environment, you basically need to ban SUVs, or at least not allow this continued creep in weight. But instead of that, let's have higher tax credits for Hummer EVs and EV SUVs. Like it's ridiculous government policy, and it's not being honest with the people. It's saying those evil oil companies are forcing you to use their product, which is preposterous. No one could care less what energy they use. They just care that your car moves forward, and when you turn on the switch, the light comes on. No one cares about their energy source, for sure. So if you want to motivate better behavior, it requires an honesty that you do not see in the discourse and dialogue today. My guess is that I spent a lot of time with the environmental community. I actually think they understand all that. I think it's just easier to yell at oil and gas companies and create some notion of a shortage that then leads to price spikes and leads to, changes in demand, and or this sort of forced policy. We're going to force everyone to use EVs by some random date. All of those are going to get pushed to the right. There is no chance we are going to be 100% EVs in any part of the Western world anytime soon. You could say Norway is an example that's now 85% EVs. I think it's a country of 5.5 million people, a generally homogenous society, a very rich society, of course, rich on oil and gas, but that's besides the point, I think. So they're able to get it done, but they're a very rich country, and I'm not sure 5 million people are the role model for translating that to billion people population in parts of Asia and elsewhere.
Geez, a lot of chat about bloody the power going forward, Arjun. Power going forward, and we've talked about in recent episodes just the easy win the world can have, especially in underground mining with SMEC VSDs. JD, take away the bloody need. That is like half the power for underground mining, pretty much gone.
But Arjun, you talk about, not doing these out of this world sort of goals and stuff, but there's low hanging fruit. There's things you can do. There's realistic things. There's things, where management can just tackle the problems head on, be front and center with the market. And I mean, this one just makes sense, doesn't it, Matty? You're pulling down your OPEX.
Oh, mate, I think it's about 10% saving in your OPEX for underground mining. Half of your power required for secondary ventilation. Wiped out. It's an easy win. A SMEC variable speed drive to bolt on to any secondary vent fan. Just bloody, you don't have a fan starter box, you have a SMEC VSD starter box. Mate, you can even couple it with some vent on demand to bloody regulate the fan speed for you. But, mate, no point running a underground secondary vent fan at 100% when you only need to run it at 10 or 20 just to keep the bag open while no one's in there and the trucks don't rip it down. It's an absolute no-brainer, and Jesus Christ, I love this shit. I love it.
Why waste the power when you don't need it, Matty? Use it for when you need it.
The world needs the power. But you're effectively, you're giving the power back to the world for other places that need it, because you don't need all that power for your secondary vent. Give Marty Law a call. His phone number's in the show notes.
Go SMEC.
Go Australia. And you're talking about Venezuela earlier, and it's probably a lot of people probably don't know that Venezuela has, the biggest oil reserves in the world, bigger than Saudi, and you say they're a poor population. It's unbelievable to think that way.
Venezuela is, I think, the saddest story over the course of my career. When my career started, this was pre-Hugo Chavez, Venezuela's oil production, off the top of my head, went from like 1.5 million barrels a day to as high as 3.5 million barrels a day. All the major oils, there was a bunch of them in those days, signed up to develop the Orinoco Belt, as it's called. And then that crude oil was naturally processed in U.S. refineries in Texas and Louisiana on the Gulf Coast. And the countries are close by. We could process their heavy crude oil. It really was a great partnership between the two countries. And I will predict that, hope that someday Venezuela will, be able to have a better government and a better situation, because there is a lot of promise there. And of course, it is a tragedy that's happened to the Venezuelan people. It's led to an immigration crisis here in the U.S. It's a terrible situation that does not have to be. That is a country that does have a heck of a lot of resource that the world will want.
Yeah, I think the resource curse is just as prominent in the hard rock mining side of things that we speak about on a daily basis as well. I want to move the conversation, Arjun, to the financing side of things, because there was heaps of pressure put on a lot of banks, the commercial banks in US, in the EU, in Australia, that finance coal, natural gas, oil, all these types of companies. And, there was lots of phrases thrown around like financed emissions and all these sorts of things in 2020, 2021, but there seems to be a bit of a rollback, a bit of a tweaking of the mandates, a bit of a changing of the phrasing. Is that something you're picking up just as much in the States, and where do you see that evolving over the coming period?
I think it is getting better in the sense that those financed emission targets, which I thought was really pretty poor policy and pretty bad idea that came from the overarching umbrella organization, is the Glasgow Financial Alliance for Net Zero. GFANZ would be the acronym. It's run by Mark Carney, or founded by him. He's a prominent central banker in Europe, and I think previously Canada as well. And the idea is to get bank institutions to look at their portfolio of loans and capital markets activity, and over timeframes like 2030, 2040, 2050, show that those portfolio of loans and capital markets activity have a decreasing carbon intensity. The problem with that is it is going to overly burden those banks to not do business with companies in their own countries. So for US banks like Goldman Sachs that I used to work at, JP Morgan, Morgan Stanley, et cetera, it's going to uniquely disadvantage US oil and gas companies. Same thing in Canada, same thing in Europe. And again, the idea that it would make sense for banks in primarily the Western world to stop financing their own oil companies, where is the logic to that? Again, I'm a lifelong equity analyst. We definitely do not like every oil and gas company. I mean, some of these management teams will drive you crazy, right? And so you can uniquely not love every management team, but that's very different than saying you should undermine your own industry that provides this critical energy that the world needs. Even if your own country, for whatever reason, figures out a way to ban SUVs and to show a decreasing oil demand trend, which again, I think is unlikely, but we can pretend that these things are true. you would still, to me, want to support oil and gas companies in your own country. This applies to US, Canada, Europe, and frankly, Australia is when obviously a bit more natural gas oriented on Australia. And so this group, GFANs, I think some of the banks that signed up for these targets and these umbrella organizations have started to wake up to it's not just bad business. For a lot of these banks, the oil and gas sector has shrunk. It's not a major part of their profits, but it's bad for society. It's bad for humanity. It's bad for the developing world that if they do not get US oil, Canadian oil, Australian natural gas, and Norwegian oil and gas are going to be dependent on Russia, Saudi, Iraq, Iran. And one can have different views on those countries. There's no chance anybody's going to be solely dependent on that. They may not want to be solely dependent on us. When we think about our own citizens, especially as an American, I think about this, again, why would America suddenly want to just become energy independent or at least less dependent? Why would we want to go back to being dependent on other parts of this world? So this whole framework, did you have to have these arbitrary timeframes in which you're going to stop financing oil and gas? Tell me what is replacing it that is economic without subsidy. And there isn't an answer, especially when you solve for how do you make the other 7 to 9 billion people energy rich? Again, you can see over the context of by 2100, pick a long time frame out there. You're going to need and you're going to want to have American oil and gas financed by American and European financial institutions. I think it deserves a lot more pushback. When I see in the US context, Republicans complain about blocking, someone blocked a pipeline or Green New Deal, and they have disparaging terms for it. The real ESG issue is this Glasgow Financial Alliance for Net Zero. It is an organization that deals with the most senior bankers, and they have a lot of sway over this industry. So I agree, it has lightened up a bit. Some banks have left this, but make no mistake, it is still a concern out there. And make no mistake that when the current generation of CEOs of these major banks who grew up in a different world with a better understanding of oil and gas are replaced by a younger generation that has been brought up on climate crisis ideology, with all due respect. I think there's a lot of concern. I have a lot of concern that some of these financial emissions targets will make a comeback, and you do run the risk of seeing these banks, these major financial institutions, move away from the oil and gas sector. I think that'd be really problematic.
How about on the investment side? Because it's a very similar sort of narrative. We have a huge super fund industry here in Australia, and there were a lot of mandates that said you can't invest in coal, thermal coal, some in met coal and these sorts of things. And again, we've seen tweaking there as kind of as you touched on before, the returns come back to these sectors as the prices rise and they generate great returns. People, and tech rolls off as well. People look at them and say, hey, we've got commitments to fill. We need to pay out to our members, and they follow the returns. And we saw that people tweaking the mandates of ESG funds to invest in met coal and thermal coal. Now that seems much more straightforward than the commercial banking, because the returns are so evident and these guys are marked on a fairly short time horizon. Do you see the same thing happening in the States?
It's very similar, and I think you summarized it well, so I'll try and be shorter in my answer. And
he's pretty good, JD. He's pretty good, Arjun. He's our macro expert. We've got on the ground
That was
here.
a great answer. Absolutely.
You make me blush, Matty.
I've always thought the sort of concern about ESG as it applies to traditional investors has kind of been overstated as a risk. We definitely went through a craze post-COVID, 2021, 2022. But I've always thought when the profitability comes back, investors will come back. Again, especially the Western world oil and gas industry had a really tough decade last decade. The returns on capital went from decent at the end of the last super cycle to simply awful for about 5 or 6 years. They kind of had to earn the right to gain investments back. So I always thought that part of the ESG sort of concern was way overstated, and investors will always chase moving stock prices and improving profitability. It's really, again, the bank side that I worry about, GFANs I worry about, not so much investors anymore. And that I would say almost all those ESG, quote, ESG concerns for can you invest in oil and gas, I think those are almost all gone here in the US. I just don't hear people talk about it.
And to chase up the companies a bit more, like you say, there were pretty dismal returns for a long period through the 2010s, just as evident in hard rock mining, a lot of the companies, especially in that 2015, 2016 period, it got really tough. And coming off the back of the 2010s, where there was just, massively value destructive M&A, a lot of investors just found it much easier to kind of steer clear. And that M&A cycle stayed away. And then it's come back in the past, year or two, both in energy. There's been some, massive deals, $50 billion plus deals in the energy space, and slightly smaller in the mining space, but still a huge number of deals. How do you think about the M&A cycle evolving as it relates to, oil and gas in the States and energy more broadly?
Again, I think there's a lot of common themes between how you just described the evolution of the mining sector and what you've seen in Australia with what has happened with, oil and gas companies here in the US. I'll throw in Canada as well. And I think to some degree, they had a really poor decade profitability-wise. They needed to improve returns. So investors said, don't you dare waste my money this cycle, capital discipline, so on and so forth. I think unlike perhaps a mining company, and certainly unlike a downstream refinery, an oil refinery as we call them, or pipeline company in the US, if you're upstream, you've got a depleting asset base. And so the idea that you can stay quote, capital discipline forever is not a thing unless you're going to liquidate, which is not a way of saying, well, we need to go waste a bunch of shareholder capital. Again, no one is calling for that. We'd rather a company liquidate than waste money, but there is a need for risk taking to come back. And to some degree, investors have kind of overlearned, hey, industry stunk. Let's not repeat that. Totally agree. So if the metrics were production growth, and I think this was true of the miners, it certainly is true of US E&Ps, we're going to grow our production 9% or 15% or 10% when oil demand itself only grows 1 or 2, 2 in a good year, generally 1%, and you're a more mature industry, you're a more mature company. No one needs a focus on volume growth. You do need a focus on I got 5 years of free cash flow at a certain oil or copper price, whatever your metric is. If I do something M&A wise or otherwise, what is my competitive advantage? Is it additive to free cash flow per share over the next 5 or 10 years versus my base business? I think I want us to redefine how we look at quote growth. But you can't kind of deplete your company away to prosperity either. Otherwise, you're simply a yield vehicle, which is fine, but you should then not expect a re-rating. You're going to move up and down with interest rates. And certainly, I think oil and gas, much like mining, your revenues are going to be very volatile. So you're not going to be a great yield vehicle to begin with. The world is absolutely going to need more oil. It's going to need more natural gas. It is going to need more coal, whether anyone likes it or not. And it's for sure going to need more copper and a whole bunch of the metals and mining that you all would know much more about. We're going to need all of that. How do we get all of that without having the blow up in profitability that we had the last 10 years? I think that's what we're trying to move through to as both sort of management teams and boards on the one hand, but also investors as well. Investors still, I think, are stuck in the recent past was too close of a memory. Don't waste my capital. But that probably says there may be more interesting opportunities at a time where people are still kind of long-term concerned about the outlook. That's, I think, certainly more true in oil and gas, maybe more so than mining.
Geez, you bloody sound, Arjun, you sound like you've been bloody some historical management burns there. I reckon we could instill some confidence back in you, Arjun, and introduce you to the Greenlands equipment team. Now, talk about a bloody management team that will not let you down. Isn't that right, JD?
Arjun, I know you've dealt with some of the biggest names in the oil and gas world. We're talking about Chevron, Mobil, Hess, but geez, these Greenland guys, they can do a job, can't they, Matty?
Oh, mate, the management team for bloody water, mate. Check some of the glorious work they've done. The bloody Carasoo Dam Southern Borefield, the Tower Hill pit dewatering, the infamous Tower Hill, the friggin' Atlas pit borefield for bloody MinRes. Mate, unbelievable. And mate, JD, they got a workshop in Leonora. Mate,
I did know that. I have heard that.
They are water ready in the goldfields to service anyone for anything water. I'm talking anything, JD. So, mate, these guys, the Greenlands team, they're on the line, ready to go for anything water related in the goldfields.
It's pretty amazing. You crack open the website and you can just scroll, and there's solution after solution. And, they've got our favourite word in there, don't they?
Oh, mate, turnkey. Mate, I open that website and I have to get a towel because the water just starts dripping on me. It is that much. It is so watery. Mate, Give them a buzz. Greenland's equipment. Arjun, have some faith in management, mate, because these guys are the ones.
You talk about a re-rate there, and a lot of these energy companies, I think it's even worse in the EU, the major oil and gas companies, they trade at pretty startlingly low multiples. I mean, especially if you compare them to the good old technology sector. And it's the same here for the majors, the BHBs, the Rio Tintos of the world. Can you envision a world where these guys actually trade on a higher multiple? I mean, we're talking single digit multiples for assets that have decades and decades to them. So it's a kind of interesting challenge to think through in a way.
I mean, I think all these companies, wherever they're located, need to give investors a reason to own them. And what have they been telling investors? And I'm being very generic here, but I think all these large companies in the jurisdictions you'd mentioned, this is also true of large companies in the US, have kind of had this mindset or mantra. We are going to focus on shareholder profitability. We're going to focus on growing our dividends and maybe stock buybacks. If you're a US company, we're not going to waste shareholder capital. We're not going to talk about production growth. And we have all these ESG goals that are going to say, we're not evil. I know you think we're evil, but we've got a full corporate sustainability document that just says how non-evil we are. And we're going to have, these scope 1 and scope 2 reductions and scope 3 reductions. And whatever energy transition demand is, we're going to meet that demand. Like none of that speaks to a positive outlook for your company or the future. And so I think the first thing this will not happen. Let's get rid of all these corporate sustainability reports. They're absolute rubbish. At the beginning of my career, when I was an investor on the buy side, I did care about and employ some of the individual attributes. I cared about the governance of a company. I cared whether their health, safety, and environment was good, or was the refinery going to blow up? That wasn't going to make profits if margins were going to be good. We cared about all these things. We didn't need it to be written down in a glossy brochure because it's created the mindset of defensiveness, of appeasement, and you will never appease your way to a higher multiple. Companies exist to generate profits for their shareholders. They should do it within the rules of society. I think it helps to have many different viewpoints within a management team and a board to evaluate things. So it's not about groupthink or homogenous existences per se. You have to run your operations well. And if the US, as an example, puts in strict methane rules, then clearly all companies should adhere to those rules. But that's the order of operations. We don't substitute public policy in the enactment of laws in the US context by Congress, which enacts a law approved by a president, to say, well, the corporation's going to do it on their own. It's preposterous, this sort of trying to substitute ESG as a replacement for public policy that either can't get voted in or isn't popular or both. And so when you get back to the companies and what it takes to read, what is your positive investment story? To take as an example in the United States, the merchant power producers. This is classically a boom bust sector. In the US, we've had flat power demand for the last 20 years, and there's signs that power is inflecting positively. And that's even before we get to the artificial intelligence, hyperscale data center kind of growth that people are expecting. The grid is old, it's been underinvested, we've added a bunch of intermittent resources, and power prices are basically spiking. And people can see it, and they can see we actually need power plant growth in the US for the first time since at least 20 years ago. And you've suddenly seen a massive re-rate in companies like Talon, Constellation Energy Group, Vistra. I'm sure I'm forgetting somebody there. There's a positive reason to own those stocks. We don't need these big companies engaging in the politics of appeasement. And I think it's especially bad in Europe. My sense is Australia suffers from that as well, where we now got to do all these uneconomic, quote, new energies projects because we want to be ESG friendly. And it's ridiculous. Invest in areas of competitive advantage that you perceive to be at the low end of the future cost curve, or if it's a higher cost asset, can I buy it for pennies on the dollar? And how do I run it better, generate free cash flow, and make a positive investment case without apology? If you screw up, you can say that you're sorry. You should meet all the existing laws of society. I think most of these companies lack positive investment cases, and you will not get to a re-rate as long as these companies are in defensive appeasement, corporate sustainability report mode.
You touched on AI there, so we have to kind of dive into the role that big tech is going to play. You talk about the merchant power companies there, and Amazon, Microsoft. They've been finally actually speaking about these things quite seriously. I think I heard from some of the podcasts you've done that they're actually they're showing their faces at some of these conferences. So there needs to be a serious kind of discussion about that, and a lot of them are pointing to nuclear, but that takes a long time. So just firstly, on the nuclear side of things, do you see that making up a serious amount of the power generation that they are going to need, and broadly that the states is going to need?
I mean, nuclear should be part of the conversation. I don't think any of these things are 100% solutions. One of the false narratives out there is somehow energy transition means we're transitioning out of oil, gas, and coal into somehow only renewables and I guess electric vehicles. And these things don't even make sense from an addition subtraction perspective.
Go Australia. that's what they think they're going to do.
Right?
Oh,
right.
Bloody
Let's
dickheads.
electrify everything, but only with an intermittent resource that we can't control. That's a great idea, right? Yeah. That's a really, really great idea. So nuclear should absolutely be part of the mix. Here, I think, as an American, I need to compliment China. I need to compliment United Arab Emirates for somehow being able to build repeatable nuclear plants. We have this model in the United States where all utility, there are a bunch of them, does a power plant, and then that's it. And then they've done their nuclear plant, and then a different management team hires a different group of people to perhaps do some different power plant. And these things take, decades on it. So there's a regulatory, there's an industry structure standpoint that nuclear absolutely should be part of the mix going forward. By the way, solar and wind are going to be part of the mix. From a geopolitical risk standpoint, once you have it up and running, we're going to excuse the fact that it comes from coal-fired electricity generation in China. We're going to excuse the fact that it is slave labor that in many cases produces these panels, and simply say, I'm going to skip all that part. Once you have it up and running in your country, it's a domestic resource, right? So I think India will use a lot of solar, but you're going to have to back it up with something that's going to be coal, it's going to be natural gas, it's going to be nuclear. You're going to need all those things. As far as AI goes, this is one of the sources of great optimism that I do think tech, the technology sector, these are the mega cap companies. They drive the US stock market. It seems like they drive the world. They are going to be our salvation to a healthier energy conversation, because it is indisputable that you cannot have your internet down. It's indisputable that if you do a ChatGPT search, you darn well want to get a result, no matter how good or bad that result may be. You want to get it instantly. The lights have to turn on. And increasingly, the US power grid is at risk of a growing number of blackouts. That is not solely the fault of solar and wind. It's wrong to just blame it. But it is correct to say you can't just add intermittent resource and at the same time retire all your base load and not have a plan and say batteries are going to make up for it today. That's patently false at a time demand is now growing for the first time in 20 years after it had been flat for 20 years. And so my comment there would be, I think tech is part of moving towards a better conversation around energy. It will never be the CEOs of oil and gas companies that convince people oil and gas is a needed industry. It always sounds self-serving. They are all petroleum engineers. They're not charming and good looking like the three of us are. They're actually pretty nerdy people, right? And so they're not able to communicate effectively. I have to say, I think it's a lost cause. I wish they would stop the appeasement. Maybe that's part of being a modern CEO today. I think it takes podcasts like this, but it also is going to take a different industry to say, we need real energy. And make no mistake, I spent a lot of time or a growing amount of time with a bunch of those types of tech companies, and they're ramping up on energy. They've gone from not knowing a lot. It wasn't, they had no reason to know it. This is not being disrespectful. They had no reason to know anything about energy, to now realizing, our made up CO2 goal is completely preposterous. Instead of down 30% CO2 emissions, we've got up 30. And by the way, we're not going to apologize for that. Kudos to Microsoft. They said we're up 30. And you know what? Tough luck. That goes with our growing business. We are going to keep our sustainability goals, but they did not show appeasement. Good for them. It doesn't mean they're perfect. They did a heck of a lot better job than a lot of oil and gas management teams when they had a quote negative result of rising CO2 emissions. They dealt with it head on and didn't apologize for it.
What's it like on the ground in the US and probably Canada as well around nuclear? Because we're seeing like China is building 10 reactors a year or something, or that's what they're planning to do. Like they're just going off their bloody head. Whereas America's obviously got a lot of legacy reactors, but it doesn't appear they've the growth is there. What is the stigma of nuclear in America, and what do you think's potentially is there going to be a catalyst where there will be massive development of new reactors going forward?
I feel like the stigma is coming down and that people are warming up to it. But I'm also cognizant of, that is my personal view, that is what should happen. We've had a major nuclear plant startup in Georgia. There's not a second plant. They've had a couple versions of it, but beyond that utility, there are not other utilities, to my knowledge, with a current clear time frame to add new plants. So it feels like the mood's improving. It feels like policymakers are now recognizing it has to be part of the conversation. It feels like it's got, in the U.S. context, bipartisan support. We have passed some nuclear regulatory reform bills with both Republicans and Democrats somehow agreeing that this is something we should do. So there are some positive signs there. Again, we still have an industry structure that is not on track to replicate the China or Abu Dhabi model of sort of crank them out quickly and learn from the previous reactor. That nut still needs to be cracked. We are not there yet. California, which of course is as blue of a state, meaning Democrat as you can get, they were going to shut down one of their last remaining nuclear plants at the last second. They didn't, because they recognized it would put a real strain on the grid. And again, I think it goes back to no one cares where their power comes from ultimately. They just want to make sure it works. So when people started getting the message that if you shut down Diablo Canyon, that was the name of it, we might have blackouts or brownouts, people said, hey, keep it on. Maybe 10 minutes before that, they would have been okay with shutting it down. But if the choice was do without power or adhere to your personal perceived environmental convictions, keeping the lights on will always win. It's not even a question.
Yeah, that's why US fascinates me so much in that realm, because like Australia, fucking, like, we've obviously got no nuclear, and so it's impossible to nearly build one. But it's because US has so much nuclear already, but then it's so stagnant in actually expanding it. I find it very interesting.
I mean, these things only get done in crisis time, right? And so, like, we had a crisis in the 70s, the Arab oil embargoes, which I was old enough to remember. We had odd and even license plates for when you could fill up gas. I remember waiting in the gas lines with my mom and dad, and I was, in elementary school at the time. But it had a searing effect on the American psyche to the point where it's still gasoline prices that drive presidential popularity, which is kind of preposterous when you look at how small of a percent of consumer expenditures gasoline is today. Yet even President Biden, who vowed to do away with the fossil fuel industry on the campaign trail in 2020, suddenly is asking companies to drill more and releasing the SPR to try and tame $4 a gallon gasoline, which is about half, if not a third of the level of gasoline prices in Europe, right? So we don't even have expensive gas prices, but they go up a little bit and people freak out about it. So it takes a crisis to change mindset. If we start having brownouts and blackouts in the US, suddenly the move towards nuclear and figuring out how do you do regulatory reform to start cranking them out, I'll be optimistic that we will figure that out. And again, this is one of the few areas that somehow has reasonable bipartisan support. That doesn't mean regulatory reform and all the other things needed have bipartisan support, but you're not as far apart on nuclear anymore as you're on some of these other issues.
What about the funding for it? Is that like if there's a nuclear shitload of plants to be built in the US eventually, who pays for it? Do the utilities pay for it, or the government? Because Australia's proposed idea was that they were going to be government-owned nuclear plants. How does it look in the US?
I think we should always be realistic that the people always pay for it. Now, they may pay for it through higher taxes down the road. They may pay for it through increased government debt that does have to pay back at some point, or they pay for it through higher utility bills. But people are definitely paying for it. What structure do politicians and companies come up with of how the notional dollars are going to get allocated? I mean, right now, again, in the US, it's mostly a utility model where the utility would get approvals to move forward with these things. They have a required, an allowed rate of return that allows them to recoup that investment from ratepayers over some period of time. And that's sort of the model we've used. The issue with that, again, is you don't get the economies of scale and learning of having the same company or small group of companies figure out how to do a bunch of these. And so, like in US shale looked like it needed $100 a barrel in the 2014-2015 period. And while there are lots of companies, what you saw was a learning curve as a lot of people went after this. The industry consolidated down to a few major players in each of these shale basins, and costs fell from needing $100 a barrel to only needing $40 or $50 a barrel. It may be creeping up a little bit again, but that's sort of learning curve where the same companies can figure out where is the best place to drill wells, how do you frack them appropriately, how do you bring them online. That equivalent model is not how our utility and power generation industry is set up. I don't think anywhere in the world is it set up like that. You have the examples in China and Abu Dhabi where the government does control this. I hate to say it as someone who's very much a free markets person. this probably is an example of area where, apologies for the lame buzzword, but private-public partnership makes sense, where some amount of government and company risk sharing. But I don't think, I'm not a utilities expert, all of you listeners should know that. Like, I can't see how you have one utility build one plant, and then the next area has the different utility build their plant. Like that can't be the most efficient way to do something like nuclear, which is so long-term and so critical to our country. I think more thought from policymakers, from better experts than myself on this, probably need to go into how do you best fund this. But it probably in the US, it's going to be some public-private partnership would be my guess at this point in time.
Roger that.
Arjun, we had one of our sort of national champions here, Fortescue. They, went from nothing to being a huge iron ore producer, and about three or 4 years ago, they started pumping a whole lot of money into hydrogen, trying to, have the dream of pulling down scope 1, 2, and 3 emissions ultimately. I'd love to know if you could go back and give them advice when they went on this journey sort of 3 years ago, what you would have said to them at the time.
Well, I've said this to other companies, so I don't know the company you've mentioned, but I've seen that story applied elsewhere, which is if the reason you're doing it is to reduce scope 1 or 2 or 3 emissions, that is the worst reason in the world to do a project. That's not a real reason. You do a project because it's economic. And I will say in the US, we have this example, like we have these renewable diesel plants where the soybean price, once you have the correct quantity, is higher than the diesel selling price. It's got an inherent negative gross margin. But because California gives you X dollars per ton and the government gives you X dollars per gallon, and someone else is giving you a different tax credit, the business is actually profitable. It is called harvesting government subsidies. Again, the American taxpayer ultimately pays for it. I find it ridiculous that you're going to enrich, again, I'm as free markets as it gets, but the idea that you're going to enrich corporate executives and their shareholders with government subsidies for stuff that I think has marginal environmental benefit, I find insane. But so you can create these subsidy harvesting schemes that perhaps have some merit. But the idea that you're going to do anything for scope 1, scope 2, or scope 3 from an investment, if you want to say that we have too much methane flaring, and that's how we would do scope 1, well, that to me makes sense. And if there's a law against flaring, absolutely you adhere to it. But the idea that you feel a personal responsibility as a company, I mean, it's ridiculous. You have 7 billion people that are going to have growing emissions. You've got China that builds, a new coal plant a week or something like that. Like, what's the relevance of an individual company doing a hydrogen project? And when you get to hydrogen, it takes a bunch of energy to make a different form of energy. It's not a primary source of energy. This is where I actually agree with the environmentalists. If you're going to do hydrogen, it darn well better come from wind and solar. Otherwise, there's absolutely no point to it. You're going to use more energy to make the hydrogen than energy value you get out of it. So I am a reasonably large hydrogen skeptic. And so I've told a bunch of other companies, you have to be really careful with hydrogen. If it's subsidy harvesting, be very clear that that's what you're doing. I don't want to hear about scope 3 and scope 2 emissions and all these things. If you want to harvest subsidies for the benefit of your shareholders and at the expense of the taxpayers of our country, then it's certainly legally acceptable to do so. But you then also have to make sure you have confidence that subsidies are going to be there over the long run, and that you're not going to get accused of profiteering off of, again, taxpayers ultimately, or that some different government may not come in and change the subsidy scheme of which your plant is based, or at least that you repeat. But that's the analysis. It is not scope 1, scope 2, scope 3 from that type of investment standpoint. It is not good for humanity to force these hydrogen projects that are not economic. How do you decarbonize in the least cost way possible? You ban SUVs to be a huge step in the right direction. Make sure India doesn't go down that route. That'd be one very clear thing you do. You would want to use much more efficient coal plants than coal plants from 10, 20, 30, 50 years ago. So in fairness to China, today's coal plants are much better than they were 20, 30, 50 years ago. So there is some notion of cleaner coal than what countries like America and Australia used 50 years ago and so forth. But we have to look, if we do want to decarbonize, it can't be let's pick the most expensive thing that doesn't work today and somehow subsidize that. And I, as a company, am going to do it because I made some stupid scope 3 promise.
That would have saved them a fair bit of money. I've got to ask you as well on the specifics of companies, given your background as an equity research analyst, you've spoken about the concept of fortress balance sheet And, that's super, super applicable to the companies we talk about, given the cyclical nature of commodities. And, you speak about the basics, just having lots of cash on hand, having minimal debt. Is that a mindset that you look at across the board? Is that the type of company, you like to invest in? What is the appropriate amount of debt? I know it's kind of different to each company, but in general terms, how do you look at the debt balance of these cyclical businesses?
I mean, I think the first thing, and again, it's in your question, which is very well articulated, which is it's a cyclical industry, right? So, ideally, you're trying your best to invest and buy stuff at the lower points of the cycle, and you're trying your best to avoid investing or even buying back stock at the higher points of the cycle, which does mean building up cash when things are good, which, by the way, most investors, in fairness to the management teams, most investors push back on cash buildup. They'll say, give it back to me if you don't want to use it right now. And I don't think that's always the right answer. There may be no more valuable shareholder value enhancing asset that a company can have than cash at the peak if you're going to go to a trough. You don't always know when the trough is going to come, but you do know these businesses are cyclical. So even just this most recent COVID downturn, if you look again at U.S. oil and gas M&A, I'd say all of those deals that got done coming off of negative oil prices, now barely positive oil prices, these are all home run deals for basically every company that had some combination of either balance sheet, cash, or at least the currency, because their stock didn't collapse because they had a good balance sheet, to be able to then engage in M&A and countercyclical investing. I think it becomes harder when you're not at peak or at trough. I've become more realistic that sometimes deals happen when they happen. Certainly in the US, oftentimes most deals are about companies choosing to sell as opposed to some companies saying, I want to buy you. And that's the nature of things. It's probably a separate podcast whether that should change or not, but that is the nature of things. I think those sort of in-between deals are harder to gauge, but the basic idea is not over-investing at the top and trying to invest at the bottom. These are all, to some degree, easier said than done, but you can chart stock buybacks. They're very pro-cyclical. It is very hard to buy back your stock at the top. Well, at least let's not waste the cash at the peak of the cycle and try our best to invest countercyclically as much as we can. So
there was one last topic I just wanted to ask you about, Arjun, and it relates to the kind of bias in energy reporting. Obviously, you've got a phenomenal amount of experience in the arena. You understand it. You've spent a lot of time out at these sites. You've analyzed the data quite extensively, but a lot of people aren't quite in that realm. They use mainstream media, or they use Substack, or they use Twitter and all these sorts of things. And, inherently almost everything seems to be biased or portrayed in a kind of biased way. I'm kind of interested to hear how you would advise people to, search for the real truth in what they're reading as it relates to energy and this sort of, quote unquote transition we're on, whether that's particular sources you look at or just a way of thinking and analyzing things critically.
I think everyone should try and become energy educated. Now, most people do not, including most fund managers and most executives. The tech companies now being forced to become energy educated, which is good. But it is a big challenge across society. You mentioned the media as an example. I think the worst thing that we have right now, and this is maybe a US example, I'll speak for my own country here, is climate journalists. I think this is the worst example of where the media has gone, where it's never about quote climate. It is about energy, our use of energy. There are, we might want to decarbonize and so forth, but it's actually about understanding why we use energy. And when you only have a climate journalism that is then going to write about every tornado and every heat wave that we have anywhere in the United States, and it's different every year, and that qualifies as journalism, and all you get are fear-mongering stories about how bad things are going to get, that's neither helpful nor educational, nor going to lead to better energy outcomes. So how do you take the vitriol out of this stuff? First thing is to be educated on energy. I would actually be okay with energy journalism and environmental journalism. I think there's a huge role for environmentalists to play. I will always say that they are needed. I'll use the US as an example. Thank goodness there was an environmental movement that said we shouldn't dump chemicals into rivers anymore, that smog is a bad thing. So there is for sure a need for an environmental voice to be out there. There's a need for energy education, understanding why and how we use energy. We don't use it because fossil fuel companies are foisting it on to an unsuspecting public. It's ridiculous. No one cares about the energy source. They care that it's available. They would like it to be affordable. They'd prefer it to be geopolitically secure. Great. but that's kind of the hierarchy of things, with availability more important than affordability. I was happily retired and a board member for a decade. And one of the reasons I started writing publicly again, in addition to enjoying it, in addition to seeing a new cycle that's fun to be engaged in sort of my new role at Veriten and as an investor and all these things, was the idea that, hey, my views may be wrong, but at least I know something about energy. And I do not agree with this energy transition narrative. So I felt an obligation to write publicly. I'm one small voice in all the voices out there, but I feel like this is a topic I know something about. I spend a lot of time, it may not seem like it, I spend a lot of time with folks in the environmental community. I deal with the likes of EDF and Ceres here in the US, and I actually enjoy dealing with them. And I respect their viewpoints. I may not agree with how they think these things should be solved in all cases. I don't think they're entirely wrong either. But again, it goes back to, are we trying to solve climate, or are we trying to solve making everyone energy rich? That's what everyone's going to choose. And it's not up to you in Australia. It's not up to me in America. India is going to go down the path they're going to want to go down. Same thing with China. Same thing with the rest of Southeast Asia. Unfortunately, that is not true of many African countries. They are still victims of American and European interference. There's a really sad and tragic legacy of that for the last 400 years. And in many respects, it continues to this day, where you have activists protesting Barclays Bank to not approve a singular oil pipeline from Uganda to Tanzania, or I might have my direction wrong, which is ridiculous. Africa uses 4 million barrels a day. They produce 7. They export more oil to the rest of the world. And 1.4 billion people use 4 million barrels a day. In the US, 350 million people use 20 million barrels a day. But somehow you can't have a singular oil pipeline from Uganda to Tanzania, right? So the countries, India, China, it's going to be self-determination. Every country should have self-determination. It is not up to us. And more of this needs to be part of the energy dialogue. So I applaud you guys for doing a podcast on these types of topics. I try and do it here in the US. It is one of the founding motivations for Veriten. We are a for-profit business. We advise companies. We want to make money on that. But there is absolutely an energy education element to it. And I always say, I am an equity research analyst. That is my mindset. I'm just trying to make the right call. As an energy equity analyst, not about whether your analysis is right or wrong. You have to make the right call, get the stocks right, and I try and bring that to this discussion as well.
Arjun, we're your men on the ground in Australia now, mate. You bloody need anything. We're at your disposal, mate. Don't you worry about that. We're pretty much best friends now after this experience.
I'm a huge Australia fan. I know it's cliche, but I grew up an AC/DC fan. First concert I ever went to.
Awesome.
First concert my son ever went to. And ESPN, when it first got started, only had Australian rules football on. So before they got any other sports, that's what we used to watch as a kid, Australian rules football. Huge fan of the country. So,
right, you should have. Did you catch the rugby league games they had in Las Vegas to start our season?
I did not. So.
Oh, mate, it was unbelievable because it's rugby league. They don't have pads or helmets or anything, and it's just constant. There's not one play and then pause. And I think a lot of the NFL supporters that watched it, they're like, fuck me, these blokes are lunatics. Like, they just couldn't get over the intensity and the brutality of it without helmets and everything, and how much it just kept going and going. I think it surprised the culture. So it was, I'll definitely go next year for Vegas. 100%.
Rugby looks insane. Looks absolutely insane. So
yeah, no, it's bloody. What else you got, JD? Or that's about it, mate?
That's about it. Actually, one more. This is probably a bit of a nerdy one on my part. I know you'd recommended a few books in your time, Arjun, some Vaclav Smil ones and Daniel Yergin ones. But is there another sort of standout one on the world of energy? Perhaps a one that's a bit more recent that you'd recommend?
I mean, I do love the Vaclav Smil books, and he's got one, The Way the World Really Works and Numbers Don't Lie. He's a professor at the University of Manitoba. He's probably retired by now, but he's just a scientist. He's not right or left. I think it'd be very hard to guess what he is, but he's a guy that actually follows science and analysis and data, despite everyone else saying they follow the science or the numbers and so forth. This guy actually does it, and it's a very pragmatic, excellent view of, I think, energy and climate and all these types of things and what's real and what's not real. I would highly recommend him. I think, Dan Yergin's a personal hero of mine. I met him when I was 23 and he was probably in his late 40s at the time. And it's a career achievement to now serve on some advisory boards with him. But whether it's the prize or the new map, these are two of the best people. What I really appreciate about both of them is they've both achieved significant career success, but you don't see them either cutting corners in their analysis, engaging in appeasement, or saying other than what they truly believe. And especially Dr. Juergen, it is shocking to see him interview world leaders, senior executives. He doesn't pull punches. He's very polite and respectful and a statesman, but he asks real questions. And he doesn't give made-up answers that he thinks, the generic public person wants to hear. He actually says, we don't have enough copper to have 100% EVs. Why would you have that as a mandate? It's preposterous. He says it in a much more friendly, statesman-like manner than what I just did, but that is unquestionably the conclusion. So I would say those two people are probably they're heroes of mine, and who I would recommend to get yourself more educated on energy and geopolitics and all these kind of things. Vaclav Smil and Juergen.
Mate, we don't need them, mate. We've got you now, so that's a piece of piss, mate. That was thanks so much for your time. No, it's early for us, late for you, so I'm glad we could make it work. And but mate, that was just a fascinating chat. Obviously, coming from decades of experience in the big smoke, mate. So we're absolute pleasure to have you on, Arjun.
Thanks for coming, Arjun.
I love being on. You guys are great hosts, great questions, and appreciate the opportunity. Thank you.
You can thank JD for all them, mate. I'm just off the cuff. So, bloody good hustle there, JD. Great recruitment as always, mate. What a bloody honour to have that friggin' ex-head of research and a bloody fellow that had skin in Goldman Sachs. What an honour.
It's pretty cool. It's awesome how, people like this just start up Substacks or whatever, to go on Twitter and share their wisdom. It's awesome that we can chip off a bit and learn from them, right?
I just can't believe they talk to me. It's great. They're all very humbling people.
I'm equally shocked, mate. Don't worry about it.
I've come a long way since boring holes in a decline. I could tell you that. No, that was awesome, mate. Good work, JD. And mate, as always, thanks to all the bloody legends that made us talking to Arjun possible. Axis Mining Technology. How freaking good are they? And he was talking about management teams, mate. Every management team here, you can bloody trust. Mineral Mining Services, DSI, Silverstone, bloody Verify, Smec Power and Technology, CRE Insurance, Greenlands Equipment, K-Drill, and mate, you want to manage your bloody trading and your graphs? Get a Spark chart in front of you. Easy as that.
Spark. Go Australia.
And go you, JD.
Go you, Matty.
And go the money miners. Hootaroo.
Go everyone.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.